Hi, this is Stuart Cooper with your mortgage market update for February 16th, 2023. Now, this is my take on what mortgage-backed securities are going to be doing or what mortgage rates are going to be doing. Are the rates going to go up? Or are they going to go down? This is my perspectives. This is not to be relied upon. This is more just to give you my 2 cents on what's going on. I've been in the mortgage banking industry for over 28 years. So let's just jump right into this. So what's going on? Why are rates going up, right? We saw a pretty dramatic increase in rates over the last few days, and we're definitely seeing the market taper off a little bit, especially since last week with the rates going up. So I thought I would just kind of share this quick analogy with you or walk you through what exactly is going on and why I think rates are going to stay high and maybe go a little bit higher in the next couple of weeks. All right, so let's take a look at this. This is what the Fed has done over the last year, the Fed fund rate. So the government right now, or the Federal Reserve's, Chairman Powell's job right now is to get inflation down to 2%. We're currently above 6 in the high sixes. So what the goal is Chairman Powell has already told us the roadmap on what the Federal Reserve is going to do going forward. Their goal is to get inflation down to 2%, right? The last inflationary report that came out, it had dropped like 0.1%. So it's going to take about, based on what's going on right now, and if that projection stays, it's going to take about 4 years to get to 2%. And that's what the Federal Reserve constantly raising rates in the foreseeable future. But what you can notice here, which is interesting, and this is what's going to bring up why rates are going up right now. So back in March, they raised it 25 basis points, then 50, then 4 times at 75 basis points. And then in December, they lowered it to 50 basis points. And then in January, they lowered it again to only 25 basis increases, right? And that's directly tied to like your credit cards. And that's why your credit cards have gone up. That's why your student loans are going up, or your car loans. It's all tied to the Fed fund rate, right? So that's the catalyst. Now, what my concern was is right here in January when they raised it 25 basis points, they based that on the fact that the economy was slowing down enough where they could start to taper off the raise and maybe just keep increasing it at 25 basis point levels. Now, the Federal Reserve has told us that they're going to continue to increase interest rates until they get inflation down to 2%. So they've given us this roadmap, right? But it looked like they were backing off, and that's why last month you really saw the stock market really rally. The stock market started coming back. And in January, yesterday, the retail sales for January came out and they were terrific. They were fantastic from a perspective of a strong economy. They were almost double what was anticipated. And that really spooked the bond market. And that's why we're starting to see rates really starting to climb, is because the bond market doesn't think we have inflation under control, and they're pricing in high inflation, right, for the foreseeable future. And that's why we're getting the increase in interest rates. And you can see here, if you look at my key level thing right down here, my key level 10-year yield, it's far to the right. It's all in the red, which tells me that it's indicating that there's a high likelihood that rates are going to continue to climb. So that's why I'm not too excited about rates coming down anytime soon. I do believe that rates are going to stay at this elevated level until we really see inflation come down, and that's my 2 cents. Now, of course, if we do go into a recession, which is very highly likely, that's when we're going to see the opportunity for rates to come back down. So if you already have a house and you already bought one or you're buying one right now, the rates will eventually come back down. It just might be a year or two before you really see an opportunity to get into a lower payment. All right. So I hope this information is useful. If it is, please subscribe to my channel, and I hope you have a fantastic day.